If gold is not a monetary asset, why does the United States have 8,000 tons, 8,000 metric tons? Like, why don't you just have an auction and get the money? And they don't have a good answer for that. Well, the answer is that it still has a monetary role. They just don't want to talk about it. Now, take what I just said and combine it with my discussion about confidence in the dollar. Um, I'm not saying we're going back to a gold standard right away, but here's where the $27,000 comes from. It's not a forecast in the sense of, sit tight, it'll hit $27,000. It's an answer to a question. If you had to restore confidence in the dollar and if you had to go to a gold standard to do that, which we might, what would the price of gold have to be to make that work?
Gold has always been a symbol of value and stability, dating back centuries. Although the formal gold standard faded in the 20th century, the allure of gold remains strong, especially for nations like the United States, which holds a massive reserve of 1,833.4 tons. This impressive stockpile surpasses the combined reserves of Germany, Italy, and France, underscoring gold's ongoing relevance in today's monetary policies. Economist Jim Rickards, known for his works Currency Wars and The Death of Money, highlights that despite gold not being officially classified as a monetary asset anymore, its significant reserves suggest a quiet but crucial role in economic stability. The U.S.'s vast gold reserves trace back to the Bretton Woods era 1944 to 1971, when the dollar was pegged to gold. Even after the Bretton Woods system ended, the U.S. continued to be the primary custodian of global gold reserves, reinforcing its dominant position in the global economy. In today's world, these gold reserves serve as a financial safety net, providing stability and confidence during economic uncertainty. Historically, gold reserves covering 20% to 40% of a nation's money supply were considered sufficient for maintaining economic stability. Rickards estimates that for the U.S., with its current gold holdings, gold would need to be valued at around $227,000 per ounce to adequately support the monetary base M1. This valuation highlights the enduring importance of gold in global economic strategy, even without a formal gold standard.
If gold is not a monetary asset, why does the United States have 8,000 tons, 8,000 metric tons? Like, why don't you just have an auction and get the money? And they don't have a good answer for that. Well, the answer is that it still has a monetary role. They just don't want to talk about it. Now, take what I just said and combine it with my discussion about confidence in the dollar. Um, I'm not saying we're going back to a gold standard right away, but here's where the $27,000 comes from. It's not a forecast in the sense of, sit tight, it'll hit $27,000. It's an answer to a question. If you had to restore confidence in the dollar and if you had to go to a gold standard to do that, which we might, what would the price of gold have to be to make that work? And it's not complicated. I took M1. M1 is a pretty good definition of the money supply. It's broader than M0, but not as broad as M2. Take M1, ask yourself, how much backing do I need to support the dollar? You don't need 100%. The Austrians bang the table and yell 100%. Historically, somewhere between 20 and 40% is enough to maintain confidence. How much gold do we have? 8,133 tons. So with those inputs, you say, okay, if I have 8,000 or so tons, metric tons, and I need to support an M2 money supply, or sorry, M1 money supply of X with 40% gold, what would the price per ounce have to be in order to make that work? And the answer is $27,000. It's just, by the way, it keeps going up. I said the same thing 6, 7 years ago, and I said $10,000. It's like, Jim, did you change your mind? I said, like, no, they expanded the money supply. In other words, if you change one of the inputs, you're going to get a different answer. So the reason the answer is a lot higher today is because the money supply is a lot higher. But take the money supply, take 40% of that, take 8,000 tons, divide the gold by the dollars, and the price per ounce is about $27,000. If you pick a lower price, you say, well, that's too high. We think it should be $5,000 an ounce. You can do it, but that is highly, highly deflationary. You would have to shrink the money supply to make that work, and it would be a new Great Depression. And that is a mistake that Churchill made in 1925. So to avoid the deflationary blunder, get it right, make it work, if you had to do it to restore confidence, the answer is $27,000 an ounce. So that's why I look at the confidence side of the equation. I was like, how are we doing there? And the answer is horribly. The U.S. is the U.S. is the greatest threat to the U.S.
Russia is spearheading a bold financial revolution to amplify the influence of BRICS countries in the global monetary system. This ambitious plan aims to enhance interbank cooperation and facilitate transactions in national currencies. At the heart of this initiative is the creation of a BRICS currency, a key component of a broader strategy to move away from reliance on the US dollar for international trade. As de-dollarization gains momentum, BRICS nations are working towards establishing a new reserve currency backed by a basket of their national currencies. Though the unified BRICS currency is still in the conceptual stage, it is rapidly gaining traction. Economic expert Jim Rickards argues that expanding BRICS membership would significantly boost the success of this new currency. Imagine Russia selling oil to India and being paid in the BRICS currency instead of Indian rupees. Russia could then use this currency to purchase goods from other BRICS members like China or Brazil. This expansive network of trade partners would dramatically increase the usability and appeal of the BRICS currency, making it a powerful tool in the global economy. The potential for a new, unified BRICS currency represents a significant shift in the global financial landscape. By reducing dependency on the US dollar and fostering greater economic cooperation among member nations, this initiative could pave the way for a more balanced and multipolar world economy. Stay tuned as BRICS nations continue to shape the future of global finance.
A lot of what you're hearing has come out of the St. Petersburg International Economic Forum that was held in St. Petersburg at the beginning of June. And Putin was there. Sergei Lavrov was there a couple of years ago. Like, nobody showed up because, Russia bad kind of thing. But now people realize that America is really the one prolonging the war in Ukraine, and Russia is, doing what they have to do to kind of protect their national security. They don't want to be backed into a corner. But now it's like okay to go there, and there were delegates and delegations, attendees, experts, etc., from over 100 countries who were there, and that's where a lot of the update on the BRICS currency was coming from. Now, the next BRICS Summit, we talked last summer. I was giving presentations on the BRICS Summit meeting in South Africa last August. But there's a rotating presidency. You host the BRICS Summit on a rotating basis.
Yep.
This year, it's Russia. And they're having this summit in October in Kazan in the Russian Federation. And what they're going to do is admit a lot more new members. We have the list of applicants. I don't know exactly which countries are going to join, but Turkey would be high on the list, and some Malaysia, and some other, maybe Saudi Arabia and some other important countries. But the point is, this is the key to making the BRICS currency, whatever they call it, the unit or whatever, a very successful trading currency, and basically for trading, settling, balance of payments, etc., is to expand the membership in the group. So if you have two countries, Russia, let's just take Russia and India, for example, and Russia sells oil to India, which they're doing, and India pays in rupees, Indian rupees. Okay, that works. You don't need to go through SWIFT for that. You can use Russian bank accounts in Mumbai. But what's Russia going to do with the rupees? Well, they can buy a certain amount of chicken curry or whatever. But there's a limit on what you can do with the currency. So in a bilateral relationship where you agree to accept each other's currencies, that can work. It's not that difficult to do. But the problem is, what do you do with the currencies? Who really wants Russian rubles? Honestly, who wants Chinese yuan? Who wants Indian rupees? Now, but if you expand the membership, it's no longer 2 countries or 4 countries, but it's 20 countries. And all of a sudden you're Russia and you sell oil to India, but India pays you in the BRICS currency, not Indian rupees, but in the new BRICS currency. But Russia can take the BRICS currency and spend it in China, or buy aircraft from Brazil, buy manufactured goods from China, buy oil from Saudi Arabia, well, they don't need the oil, but other manufactured goods from Turkey, as the case may be. Well, once you expand the membership, now the currency is really useful. So it's not just limited to whatever one country can sell you. It's expanded to what 20 countries can sell you. Guess which monetary union has 20 members?
Right.
The euro. So people who say this can't be done. I'm like, hey, ever heard of the euro? It can be done very successfully. So the key is not, cooking up some formula, a gold standard exchange. Those are important issues. I'm not dismissing them, but I'm saying the real key is expanding the membership. And that's what they're going to do in October.
Good point. I'm always scratching my head when I have folks so dismissive of the BRICS. Our experts basically using the analogy, well, it's like a group of family members at a table. How in the world are you ever going to get them to agree to a common currency, whatever that looks like? But that's such a good point. Look at the euro. They got there.
Right. Yeah, they did. And again, there's a lot of technical work behind the scenes, but that work is going on. By the way, the BRICS started, I know it was a marketing gimmick by Goldman Sachs in 2000.